Right, good morning then everyone as we head into European trade on Tuesday the 6th of February. We'll have a flick across markets and see what's going on and see what we think for the upcoming day ahead. Main bit of information over the course of yesterday evening and into this morning is the RBA. Kind of how we were thinking about it yesterday though. If you watched yesterday's video, we were talking about the possibility of them keeping some hawkish rhetoric about potentially leaving rate cuts or rate hikes, should I say, on the table. They did note that inflation still remains too high and they will tighten further if necessary. So no sort of chat about anything to do with rate cuts. Sort of a kind of a bull or a hawkish central bank, somewhat hawkish anyway, still leaving the prospect of rate hikes on the table. The flip side, you've got China though. China continues to weigh on the Australian economy, even though inflation remains high. It's still coming down lower. As I said, China continuing to put downside pressure on the Australian economy, therefore also the Australian currency. So a little bit tricky when it comes to the Australian currency. If you get Dover Central Bank plus China getting in the way of any strength from the Australian dollar, it's a pretty good recipe for the downside. Which one wins is a different question. Obviously we get quarterly inflation prints out of Australia, which we did have last week. We'll have to await the monthly CPI indicator to give us an indication of how inflation is faring over the next couple of months. So we'll keep an eye on that as we go on through. Apart from that, you got to keep an eye on China. Right, but China, I mean, why China's national team won't save spiralling markets, kind of an opinionated piece, but for a second day running, state-backed buying likely scraped Chinese stocks from multi-year lows. I mean, state-backed buying, they did suggest, a $280 billion, which is about a 2 trillion yuan investment into capital markets in order to try and prop up their economy, try and prop up their stock markets. If they keep buying stocks, markets keep selling off, that's obviously not a good thing for them, but their economy continues to struggle. Chinese assets continue to push lower, albeit slightly propped up over the last couple of days by the state. If that continues to happen, it's likely to be supportive for the Australian dollar, but ultimately, if the Chinese economy continues to perform badly, just the price of the stock market going higher isn't really gonna save the economy now, is it? But again, something for us to think about as we go on through the through the day. I mean, this is just updated here. You can see Chinese stocks surge on rescue efforts. And surge is wrote a sharp rise in Chinese stocks higher, but it's not the most massive amount of upside in the world considering where it has been previously. But 4% gains, 3.5% gains across the Hang Seng and the wider Chinese index is solid upside. I mean, we'll have a look at some charts when we get around to it, but solid upside. Does that really do much though going forward? It'd be interesting to see how that moves over the next couple of days, but certainly some state-backed buying of Chinese stocks, which has helped to drag European and US stocks higher as we head into the European Open, or we're just past the European Open. You can see US, European and Asia Pacific equity futures all higher. You can see commodity markets pretty much all higher, apart from gold and copper pretty flat, but copper hasn't opened for the day yet. So bond yields down slightly lower. Bond yields lower again, help stock indexes higher, certainly at the moment. Yesterday we saw broad-based US dollar strength throughout the day. We saw a bit of equity markets was an interesting one yesterday. We'll have a look at that again. Bond yields were higher in yesterday's session. A bit of a pullback today. For now, it just looks like a bit of a pullback on the dollar and in yields. Stocks bit more of a muddled picture, but we'll have a look at that once we get around to the charts. The Australian dollar higher across the board for reasons that we have just outlined. Economic calendar light over the course of this week. You see the RBA, which we've already talked about. A bunch of kind of random economic data out over the course of today. Nothing really of note. Some retail sales in Europe will maybe be an interesting one. The fact that consensus is for minus 1%. Now obviously shows consumer spending throughout the Eurozone is not good at the moment. Apart from that, you can see, pretty broad-based US dollar strength. You can see your Aussie, Kiwi, Euro and Sterling all lower in yesterday's session. Biggest two-day drop for Sterling in over a year. Maybe a slightly interesting one, considering the fact that they will hike interest rates later than the rest of the central banks. But and that was also despite some positive economic data for the UK yesterday. You can see services PMI 54.3, some kind of lower tier unemployment or employment data showing not too bad as well from the UK economy. So the fact that got whacked yesterday is a pretty surprising one. But anyways, no point trying to work it out too much. I don't think. I still do think sterling is a decent bet for some upside, but as I've said before, against the US dollar, probably not the best of ideas. Equity markets sold off again yesterday off the back of that economic data we saw. Services PMI 3 o'clock yesterday, higher than anticipated. So again, further strength in US data. But you saw after NFP, the pretty heavy sell off after NFP was just bought straight back into. Decent sell-off the services PMI, again bought straight back into. Same thing across your S&P, your Dow Jones, your Nasdaq, your Russell, all showing the same types of price action. Even a dip off the back of this news is just seemingly another dip to buy back into in US stocks. Yields continue their moves higher. Bit of a pullback so far, but certainly a lower time frame, they look like they're trying to make a little bit of an attempt higher to start the day today. So we'll keep an eye on yields. If yields then push higher, that is interest rates, to put it simply, moving higher. That should be supportive for the US dollar. In theory, it should be supportive or negative for equities, but I'm not sure equity markets care too much. They seem to just want to go up any available opportunity at the moment, and again, that's the side of the fence that I think you need to sit on. Oil having a bit of a pop through this kind of short-term high in here, which is interesting. Does that continue its move higher into today? I spoke about oil a little bit yesterday. What way do you go on oil at the moment? It's pretty neutral from a fundamental perspective, so keep an eye on your technicals, see what way that decides to trend. Gold was seemingly just moving the opposite to yields at the moment, which is opposite to the US dollar, which is understandable. We'll keep an eye on that as we go on through. You can see China, the Chinese stock index up. Obviously you can see some solid upside over the last couple of days. Looks like a decent amount on the hourly chart. Come down to a daily chart though, it doesn't really make too much of a difference as of now. So it'll be interesting to see if it holds those gains. But certainly over the last couple of hours, it's back down. From the low to the high up there was a 5% gain. We're already back down from those highs posted a few hours ago, already down 1.5%. So be interesting to see how that trades over the rest of today and then into the rest of the week. Does that stay back buying fail? Does it turn back lower? Is it just a rally to sell back into, or are they trying to prop up the price of the Chinese stock market? But it's kind of just waffling a bit about different bits of news. I'm not sure Chinese stocks are the best place to be looking at the moment. I think you got to keep your eyes peeled on the US assets, haven't you? Is this a rally to sell back into on the US dollar? Or, dip on any of these or rally on any of these currencies, Aussie, Kiwi, Euro, Sterling, but obviously a dip on the US dollar. Does look like for now, it's a decent pullback to buy back into. Aussie looks like it wants to take a turn lower. Kiwi looks like it wants to take a turn lower. All these look like they want to take. These look like they want to take a turn back higher. So, underlying US dollar strength. Positive economic data yesterday. Positive economic data on Friday. Again, I see no reason personally for that to turn around just yet. You've got nothing on the calendar in order to get that to keep going. You've got nothing now really for the rest of the week to get that to keep going. So, as long as you bar any sort of massive sell-off in the US dollar, I think you got to stay long US dollars, long yields, which is short bonds and equity markets. It's always a decent bet for them to be higher on any trading day. So again, do you see the three of them moving higher at the same time on the same day? It's not something you see too often, but that's kind of where we're at the moment. So people, we're looking to sell equities, we're looking to sell the dollar, we're looking to buy US bonds. So I think that's where you got to focus your attention over the course of today.